Starting out as a trader, I was lost, struggling to know what I was doing wrong. This was due to the fact that I had yet been through the trial and error necessary to learn what works. If I could rewind 12 years back to that first day of my trading career, there would be 3 game-changing concepts that I believe would have fast-tracked my learning curve and would have brought me to profitability much quicker. In today's video, I'm going to go ahead and share with you those 3 concepts that I believe will transform your trading journey and put you on the right track towards profitability. So I believe that the first and most important concept that a new trader needs to start focusing on is the key levels on the futures contracts. Now, whether you are a futures trader, options trader, or you just trade common stock on individual assets, I still believe that the number one thing to understand is futures levels and how they affect the market and your overall positions. Being able to identify key levels on the 4-hour or daily chart, major inflection points on the futures contracts such as the S&P 500 or the NASDAQ futures is crucial. Tailoring your positions around what could happen at these key levels is crucial. One of the major downfalls for newer traders is that trading is very overwhelming with charts all over the place, loads of data to comprehend, and they can't get a feel for what's important and what is noise. I would say that 90 to 95% of what you look at during the day is completely noise. Being able to just focus on the 5% that matters, that actually will cause a reaction on the market, is what you need to be paying attention to. Just trading off of key levels will increase probability, reduce randomness, simplify your analysis, and overall build confidence. If we've done our analysis and we know that a key level is major on the 4-hour chart on a larger time frame on the S&P 500, like the 200 SMA today at 5870. Today, we walked into the trading day. We knew 5870 was a major level on the ES. We knew there was a major moving average there, and the probability of longing the market over that level was extremely high. The probability of that trade working out was higher than trading at some random point on the market. If we just focused on these major levels, our probability and our trade entries would greatly improve. This would also simplify your analysis. Instead of chasing every move that's going on in the market, we have our predefined levels that we look for reactions at, and we take our trades based off of those levels. We're building a system based off of levels, and we're making decisions only at those points, reducing randomness, avoiding noise, simplifying your analysis, and making it much more structured. My entire system and strategy that I trade every single day is based off of futures levels on the NASDAQ and S&P 500. I remember when I first started trading, I would never look at these levels. I never created a thesis based off futures levels. I would just look at an underlying stock. I would try to find some levels on that, and I would be lost as to why certain rejections or certain bounces would happen on that individual equity. This is always led by a rejection or a hold on the overall market. If we are not focusing on what the overall market, and for me, that is the S&P and NASDAQ futures, if we are not focusing on what's going on and where we are trading on those futures contracts, whether that's up into a supply level or down into a demand level, we are trading, in my opinion, with one eye closed. So I want to go ahead and show you an example today of where I actually took SPX options contracts based off of the futures contracts key levels. We walked into today with a key level at 5870. We longed on a break and retest over that level. I used that key level as my guide, as my structure behind the trade, and this is what led me to profitability. So every day we approach the market, we create a thesis and a game plan in the pre-market. We need to understand what levels we are heading into the day, watching, going to read price action at, and looking for reactions off of. And so today, which is May 13th, we walked into the pre-market with a very clear and established previous high on the NASDAQ futures between the 21,000 level and the 20,970 level. If we zoom into that previous day, we can see that we had highs anywhere between the 21,000 wick high right here and some very clear rejection points around 20,970, 20,970, and up here at 21,000. So I go ahead and I create my zone anywhere between that 20,970 to 21,000 on the NASDAQ futures. And what I'm going to be looking for is whether the market moves higher and rejects that level or breaks above and holds above that level for a trade opportunity. This is the only area I am interested to look for a trade. I am not interested in the middle of this channel. I am not interested in random spots along this chart. So if we move into the day, this is all into the pre-market, and I will go ahead and add the grayed out area to indicate the pre-market. We can see heading into today, we moved higher above that level. We opened the market above that level, and due to the fact that we were above the key rejection points from the day prior, I am looking for a break and hold above that level. I'm looking for the market to establish that that previous high from the previous day is going to turn into a new low. If I see these previous highs from the prior day turn into a new low, I can now use that key level to establish a trade off of. This is the NASDAQ futures, and I will also make sure that it lines up on the S&P 500 futures. So if we go over to the S&P 500 futures, we can see that we had highs anywhere between the 5870 level and the 5875 wick high, which I went ahead and I created my zone, understanding that this was a previous day high. We can see same exact concept happened on the ES. We pushed higher into 5875 in the pre-market, actually rejected that level, and started to see some downside come in when the market opened. When the market opened, we wait to read price action and see what is going to start to establish. We can see here about 15 minutes into market open, we get a push, and we start to look for that upside above 5870 and 5875. So we use these key levels to guide our trade. Now, deeper in the video, we're going to get into the actual entry confirmation we look for to establish that trade. And even deeper in the video, if you stick around, we're going to talk about stop losses. So the second game-changing concept that I want to share with you today is to focus and really hone all of your energy into one entry confirmation strategy. And for me, that is the break and retest. So we have our key levels. We understand that we're going to trade based off the key levels that we create ourselves on the futures markets as well as individual equities. But that is not an entry confirmation. That is just the area that we want to be entering the play around. So if we think the S&P 500 is going to move higher based off of a key level, what are we looking for to confirm an entry? This is where the break and retest comes in, and I believe if I would have focused on this much sooner in my career, I would have gotten to profitability much quicker and understood what to look for every day I walked into the market at a much faster pace. If we focus on one strategy and start to use it every day, we start to learn the muscle memory. We start to gain the intuition. We start to gain consistency, things that we look for every single day. You may not think that intuition and muscle memory is something that applies to trading, but it absolutely does. If I see the same break and retest setup over and over and over again, I will be more confident to take that trade. I will understand how to manage that trade. I know it's the same thing that I see every single day. This increases my odds of profitability. If we don't focus and hone in on a single thing in our trading and we chase all different shiny objects that are moving around the markets at all different times, we will never become a master of one. We will become a jack of all trades. And in my opinion, you need to be a master in this game of one single thing to be profitable. So to show you what the break and retest looks like, let's once again dive into the charts and show you the exact example that we just talked about with the S&P at 5870. We broke above the 5870 level like you saw in the previous example, but that was not our entry point. We did not enter just because we broke a key level. That is a key level and that was important, but that's not the entry confirmation. The entry confirmation is the next step. That is the break and retest, and that's the example I'm about to show you. So jumping back into the example that we talked about earlier, this 5870 to 5875 zone on the S&P 500, this was our key level that we established. This was the first core concept that we talked about. Now we're going to talk about what's the entry confirmation we're looking for to enter this trade. So here we can see we had that very clear pre-market high, which was also the previous day high at 58.75. So what I'm looking for here is a break above this level. I'm looking for it to establish a hold, and I'm looking to use this level as my guide for the trade. Right here, we can see that around 940, we have established a breakout above this level. Right here at 940 on this candle, we see that there is a breakout above the 58.75 level. Now, I am not just chasing a long after we break above that level. I am now giving price action time to show me that it wants to attempt to hold that spot. Now we can see over the next 2, 4, 6, 8 minutes, we can see that price action maintained above that level and created a perfect flag right here to the downside. We can see that 58.75, which was the previous high, turned into a very clear hold, and this was a long that we went ahead and took today with the group, which ended up being a 200% move on the SPX. So this, in all of its glory, is a break and retest long entry, and I am using my key level to gain confidence, knowing that this is a strong level that must hold. I am using my break and retest entry confirmation to establish that long and establish confidence. And the third and most important thing is I can now establish where my stop loss is, but we're going to save that for the last part of this video. But before we do that, just to take this video up another notch, I'm going to go ahead and include a live clip of my entry on this trade right now so that you guys can see exactly how it was done in real time. Yeah, I mean, I'm going to try some SPX longs right here, guys. I took some SPX longs here. Stop under 58.76. So just looking for a break and retest of that 58.76 spot. Still holding some. SPX up 22%, 24%. 63% SPX. 59.20. Careful. What happened to these SPX contracts? Where did this come from? 200% SPX. The third, and I believe most important concept that I want to share with you in today's video is to have a heavy focus on stopping out and accepting losses. Now, I know this sounds like something you've heard on every other YouTube video about trading that you've watched, but I want to go ahead and add a personal piece of advice and a personalized story here about this concept. If I look back at my years of failing, my years of not being a profitable trader, there is one single thing that stands out after tracking my trades and understanding what my performance was. My lack of profitability was always led by a single blow-up day or a streak of red days that got out of hand, that I didn't accept losses, that I just allowed things to go to zero. If I would remove all of those blow-up days out of my P&L in the beginning of my trading journey, I believe I would have gotten to profitability 10 times faster. It's the blow-up days. It's the lack of accepting losses. It's not allowing yourself to be wrong that really leads traders to not seeing green on their P&L at the end of every month. I truly believe that a lot of you out there know how to take a trade, know how to find something that's profitable, know how to be right on certain situations. But I believe what holds a lot of you back is that you don't accept the loss when something goes against you, and that loss will always offset multiple wins. You need to think of trading as a system where we need to have 2 steps forward and only 1 step back. If we continue to take 2 steps forward and 4 steps back, we will never progress in our trading career. We need to cut this out of our trading. This is a huge concept that if I look back and I go back to my years of trading and I think back to those tough days, the days where I would get off the desk, have a shower, sit in the shower, stare at the wall, not know what the hell just happened, look at myself in the mirror and say, what just occurred, right? Those days, I vividly remember those days. And every single one of those days was a blow-up day that I know that I should have taken a loss that I did not take. And the funny thing about those days is that the next day, you typically find it to be a green day. And then you think back and say to yourself, if I would have taken that loss the previous day and cut it short, I would be net green over the last 2 days, right? Because I'm green today, but yesterday was a blow-up day. But if I would have cut that loss short the day prior, maybe I lost $200 the day prior. Today I made $400. So I was upset I lost yesterday, but today I made it back and then some. Instead of that, we put ourselves in those holes where we're down $2,000 and we can't make that back. We need to cut those losses short. This is the only way towards profitability. Now, the great thing about our strategy that we talk about on this channel, which is the break and retest, and the great thing about the concepts that we apply over key levels on the overall market is that we should know exactly where a trade starts to work against us. In the examples that I've shared so far in this video, we've had key levels, we've had a very clear break and retest that we traded off of. And we knew exactly where that level was that we wanted to see the market stay above for the trade to stay valid. So we have a very structured stop loss. So the hard part is not finding that stop loss. We understand that using our entry criteria. We understand that using the break and retest. Now the hard part is, are you going to stick to that stop loss? When you see the market trading below your level, are you going to react and say, this didn't work and I need to take my loss? Or are you going to react, watch that continue lower, not accept that you're wrong, and turn a good loss, a trading loss, into a blow up? Before we enter any single trade, we need to have a stop loss. And a stop loss is what should give us confidence to enter the trade. When I enter a position, if I don't have a clear stop loss, I do not have confidence to enter the trade. Because once I enter that, I am not going to know how to manage it. So I need to know, when I put risk on the table, how am I going to manage this trade? Where is my stop loss? This has to be predetermined before we enter. If we try to determine this risk level, this stop loss level, this invalidation line after we enter, I believe that your mind plays games. It starts to make you find new levels, levels that are lower, levels that make you feel better of staying in a position, levels that probably are not as valid as they were when you were thinking more logically before risk is on the table. Once risk is on the table, something funny goes on in our minds that makes us try to find comfort. We try to find reasons to stay in a position. We try to convince ourselves that something is still right. We need to predetermine these risk levels and these invalidation lines before the risk is on the table so that we're thinking logically, finding the right spots, and sticking to that when the trade is on. So let's go ahead and show you where that stop loss would have been for the trade example that we used today, where I would have taken off that trade if it did move lower against me, what I would have lost on this trade, and how we have to accept this and understand that this is a good loss, something we need to accept, and something we can come back from. So now let's talk about the stop loss. We've established our key level. We understand the entry confirmation that we're looking for, which is the break and retest long entry. This candle right here, you guys can see at around 950 was where we started to get interested and started to enter this long position. This is a breaker candle above the flag and a clear confirmation that this 58.75 level is attempting to hold, and buyers went ahead and stepped in. Now, if you watched the live trade from earlier in this video, you can see that we entered on this candle to the upside around the 58.82 area. The question now is, where is our stop loss? In this situation, it is very easy to establish our stop loss. We just saw a previous high right here. We just saw a very important hold come in at 58.75. So when we set up this long entry, let's say our entry is right around this 58.80 area around here, we now have a very clear stop loss underneath the 58.75 level. If the price action starts to reverse and move back under 58.75 and show rejections, we now know that this trade has invalidated. We know our stop loss. We understand what must happen for this to stay true. Because we know our key levels, we know why we entered the position, which was a hold of 58.75. So if we break back under 58.75, our original thesis is invalidated. And that means our trade is invalidated. And that means we must stop out. So whether this trade works or not, we know our stop loss, we know why we entered, we know our key levels, and that is an A+ opportunity.